Hello, welcome to European Open Briefing for Friday, May the 18th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to have a look at what's happening in the currency markets today. The US dollar is testing the 110 yen level as it continues to be driven higher by rising treasury yields. The rising treasury yields are showing no sign of slowing just yet. As a result, the euro is stuck at near 5-month lows. Pound continues to hover around the 1.35 dollar level, but we are seeing the Aussie and the Kiwi slightly firmer this morning, though the loonie is flat ahead of some key data releases out of Canada later today. Oil prices are holding near their 3.5-year highs. Let's get started now with the US dollar. We can see in the chart dollar index staying close to that 5-month high it touched on Wednesday. Dollar yen though continues to climb higher. It briefly touched the 110 level. It is so far up 1.4% this week, and this is on the back of higher treasury yields. The 10-year yield continues to make fresh 7-year highs. It's now risen as high as 3.128%. So all of this is on the back of expectations of higher inflation, partly due to higher oil prices. The monetary policy divergence, which has come back into focus recently due to slowing growth in the Eurozone and Japan, and of course concerns about higher US debt supply. All of this has been very positive for treasury yields. Earlier today there was quite a bit of positive risk sentiment on reports that China has offered the US to reduce the US trade deficit with China by $200 billion, though China has later come up to say that this is not true. So we are seeing some of that risk sentiment recede slightly. Nevertheless, the Japanese yen is broadly firmer this morning. The euro and the pound are both up against the yen, recovering from lows earlier in the week. Although those trade tensions have eased somewhat between the US and China, and although China has now denied those claims about making an offer to the US, there's some hopes that the trade talks taking place this week between the two nations will bring some positive development there. We also have, of course, the higher treasury yields weighing on safe haven assets, not just the yen, but also gold. But in addition to that, Japanese yen has come under pressure from weaker than expected inflation numbers out of Japan. We saw core CPI, which is the measure targeted by the Bank of Japan, fall from 0.9% to 0.7% year on year. In April, forecasts were for 0.8%. So this suggests that the Bank of Japan is unlikely to meet its inflation target by the fiscal year 2019 and will likely maintain loose policy for a considerable period of time. We're seeing the euro rise further above the 1.130 level, having briefly broken below that level on Wednesday. It briefly touched the 131 level. The pound is at a 2-week high, breaking above the 150 level at the moment, though it's trading just below that level. Let's now turn to European currencies. It's much of the same picture as we've seen for much of the week. The euro hasn't really recovered from those 5-month lows it touched on Wednesday. It's staying close to the $1.18 level. So we do have the political uncertainty in Italy still weighing on the single currency. So the far-right League Party and the populist Five-Star Movement are close to reaching an agreement. The main obstacle at the moment seems to be the choice of who's going to be the Prime Minister. And although we did see some reports about some more extreme policies, such as asking the ECB for debt relief, markets are fairly confident that those policies will not get approved. Although this uncertainty is weighing on the euro, it doesn't seem to be too much of a strong reaction to that just yet, as indicated by the limited gains in Italian government bond yields. The euro, though, is still set to end the week 1% lower against the dollar. The pound is also set to end the week slightly down against the US dollar. It's been stuck around the 1.35 level for the past couple of days. There is still confusion around what the UK's plans on whether or not it's going to stay in a customs union. It is now looking like according to the latest comments by UK Prime Minister Theresa May, that the UK will probably apply to remain in a customs union for a limited period when the transition period ends in December 2020, to give the UK time to come up with a workable solution to the Northern Irish border. Let's now look at the Australian and New Zealand dollars. We're seeing both currencies head higher. We saw that earlier recovery midweek coming to an end, so now they're reattempting to regain some positive footing against the US dollar. The higher commodity prices are helping the two currencies. Overall, though, the diminishing yield advantage with the US, mainly on the back of diverging monetary policies, the RBA and RBNZ both set to look on hold for at least until the end of this year, while the Fed continues to raise rates. So that is weighing on both currencies. The Aussie will probably, at the moment, it's down by 0.2% against the US dollar this week. The Kiwi, though, is closer to ending the week 1% down. It's a similar story with the Canadian dollar. We can see yesterday the loonie did manage to rise to 1 week highs before falling back again, but now it's moving slightly higher. The loonie fell back yesterday after US trade representatives said that the US, Mexico and Canada are nowhere near close to deal. So we saw the loonie retreat from around 1.2740 to around 1.2840 to the US dollar. The Canadian Prime Minister, though, remains positive that there will be a deal soon. The near-term focus, though, is Canadian inflation and retail sales data due out of Canada later today. And oil prices, we can see their Brent crude yesterday breaking above the $80 barrel level for the first time since November 2014. We do have the oil rig count coming out of the US later today that could bring some volatility, but for the time being, prices are well supported. We're seeing Brent currently trading around 79.60, WTI trading just below the $72 a barrel level, which yesterday it reached for the first time again since November 2014. And finally, looking at today's economic calendar, the main focus will be the Canadian numbers. We don't have any other major data, but we're also going to have a speech by Fed Governor Lyle Brainerd, which could attract some attention. That's it from me. Thank you very much for watching and have a great day.